You have a Coforge that is in focus. Smart moves on that one. Firstly, they've partnered with Sabre Corp. The company, in fact, has bagged its largest ever deal of $1.6 billion. Puneet joins us more. Puneet, the partnership, the biggest deal, and a stock split that has been announced. And that's what I think is keeping the street enthused, with gains of nearly 9% coming in there.
Well, definitely. They've signed a new 13-year deal with Sabre Corporation of roughly about $1.56 billion. Now, that's one of the biggest deals that they have done comparatively in the past as well. So there are two brokerages which have a positive view to maintaining the sale rating. Let's start with Morgan Stanley first. An overweight rating, 11,500 is the target, which was a 59% upside from the previous close. They essentially said that, of course, this is the largest deal that they've signed, and estimating an $80 to $120 million incremental revenue coming in FY26. They're estimating a 5 to 8% growth going forward into FY27 as well. And they mentioned that the management had flagged that some deals that the company is pursuing is disproportionately larger than they have in the past. So it's definitely a big positive going forward as well. They mentioned that it could pose an upside risk to their numbers and estimates for FY26. So watch out for this one. Jefferies again hiked the target price to 10,350 from 10,100 earlier. It mentioned that the deal will also improve its positioning in the travel space as well as open doors to more such large deals in the future. And they say that it can reflect its ability to gain share irrespective of the demand environment. That was one of the key points. The Macquarie note is they have maintained the underperform rating. Target price is 5,220, and they mentioned that while this is an existing customer and may not take incremental revenue in FY26 based on whatever the estimate was, it's still a large deal, but they are maintaining the negative stance on the stock. And Axis Capital as well maintaining a sell rating, target price of 7,900, and they mentioned that valuation is the only concern, but it's a big positive on this deal aspect. So the commonality across brokerages has been that this is a good transaction, good deal to win. And going forward, it'll be key on the comments in terms of the demand environment going into Q4 as well.
Right, so that's a positive one coming in with regards to Coforge. Gaurang, how are you looking at a Coforge, taking into consideration, one, in terms of the deal size, and that they've announced a split as well? Because if you see in terms of the stock performance in the last 6 months, it's up around 20%, but overall, this year itself has been a downer with cuts of around 18% coming in 2025. So do you think a good opportunity to enter the stock as well with the prospects now?
Viral, subject to the prospects are big long term. Okay, I mean, not only Coforge, but I think your IT index and the IT pack overall has been under pressure. And rightly so. There are a lot of unconfirmed news flows that the Trump administration is also going to target the Indian IT sector. I don't know how far that is true or false, but that's the word that is doing the rounds in the market. So there is an overhang over there. In terms of the company, well, as a brokerage house, we at Geojit Financial Services have a coverage on the positive side on Coforge. My sense is then every time that I have looked into the past history of strong companies at a particular price, management or the board announcing either a split or a bonus, augurs well for long-term investors, because after some time, after adjusting to the respective split or bonus proportionately, the stock prices tend to move up. So it can be a good wealth creator also.
Okay.